How's it going, everybody? My name is Josh,
My name is Logan.
and we're coming to you from J.R.Heller Real Estate and Mortgage.
How you guys doing today?
Today, we are going to be talking about
The current market and what we're seeing in our local market. I know it's different for everybody out there in the country, and a lot of places are seeing recession, big time in the housing market. Whereas, we're pretty stable still. I mean, we don't have enough inventory to keep up.
Yeah, it's definitely crazy. It's definitely still a drought in inventory, as you said. And as a result, there's a whole bunch of buyers in the marketplace going after the same property.
Yeah, I know. I had 51 offers that I had buyers competing with just 2 weeks ago. Insane. We saw a crazy jump when interest rates were low, within the last 2 years. But even then, I wasn't hearing about 51 offers on properties
No,
because there was
right.
more stuff on the market.
Well, and that's the crazy part, is that it's almost even crazier than it was back then here, because what has happened is everybody's got a ton of equity in their homes,
Yep.
but to sell and to get the equity out of it, there's no inventory. So it's like, why should I sell? Because I'm just going to be basically almost downgrading.
Yep. Yeah.
Because there's so many competing offers. And so nobody's selling, which is causing a lack of inventory. So even though interest rates are up compared to where they used to be, it really doesn't matter, because it's inventory that controls the market. I mean, yes, interest rates obviously control funding, right? They control the financial aspect of what somebody can afford, but the real estate market is really dictated by inventory.
It's simple supply and demand economics. While we're on the interest rate thing, do you know what's par right now for government-backed loans and conventional loans with no buy downs? What are we looking at right now?
I mean, basically around 7%.
Okay.
It's around 7.25 on some products, but yeah, they fluctuate daily, honestly.
Of course, yeah.
But yeah, I mean, we're staying around that 7% mark as far as par. Obviously credit score has a lot to do with it too. But if we're talking like a 640 FICO, you're around 7% right now.
Yeah. So then on the flip side of that, on the inventory side, I've been telling this to everybody. I feel like I'm a broken record at this point, but the only reason why people are selling right now, they're either increasing their lifestyle, they're decreasing their lifestyle, empty nesters, or, just somebody looking to downsize, and then relocation, like corporate relo. If you need to move for work, or you're looking to, get new scenery, that's the only reason why you're moving. Other than that, it's like divorce, estates, very circumstantial situations. Correct. But beyond that, the average folk is not selling their house right now because they either bought or refied last year, and they have 3% or less on their house. And why would they go anywhere?
Yeah, it doesn't make much sense.
Yeah.
And that's why it's creating such a crazy market with lack of inventory. So it's funny, I had my pool guy out yesterday. We're looking to get in a pool in the backyard, and he was talking about how COVID, the prices for pools, and the craziness that happened in that market, because basically COVID happened, everybody got this free money, and everybody was at home quarantined. And so what do? I mean, the only thing you can do is stay at your
buy
house.
A pool.
You buy a pool, right? And so the pricing just went crazy through the roof, astronomical, because at the same time, all the pricing for the materials to build the pool went up.
Everything went up like crazy.
And then it was also very hard to get. Another supply and demand, right?
Yep.
And so it got crazy. Luckily, he said, as of recently, like the last year, it has smoothed out, where prices didn't necessarily go down a ton, but there was a more supply. And so it's stabilized, where, it's not as crazy as a market as it was. I mean, if you would have called a pool place during COVID and asked them when you can get on the schedule,
a year.
No, like 4 or 5 years.
Wow.
Yeah, we called, who was it? There was a company out in Lancaster we called when COVID first happened, when you were quarantined and everything. And it was 4 years out. They were scheduling 4 years out.
Yeah, it's insane.
Luckily now you're down to a year, but
Yeah. Yeah. Now, I still have buyers every day. Unfortunately, we're either doing pre-offer inspections or they're waiving them completely, which I never condone. But, if they like the house, they like the area, checks your boxes, you got to be as competitive as you can. And, unfortunately, on the buy side, a lot of listing agents and sellers are not allowing escalation clauses. So with how hot the market is, it makes it really difficult to determine what the entry price is. It makes it a lot nicer for the buyer. I understand why they do what they do. They just want highest and best. That's fine. But on the flip side of that, when I'm representing a buyer, it's really hard to determine how much is the right offer to put in that you're going to win the property, not overpay by $10,000, $20,000.
And that brings a really good point into it's really hard to determine financing for a buyer as well, because, let's be honest, somebody who is doing a USDA 0% down loan and asking for 6% seller's assist, I mean, you can only go so high for those seller concessions until you're out of where the appraisal really is going to be.
Yep.
And then also you're competing against people that are conventional with 20% down that have an appraisal gap in it even. And so it makes it really hard in this market. Obviously, those two competing offers in any market are, going to be hard to win. But again, when you have 51 offers on a property versus what a normal market looks like, maybe 2 or 3, you can get away with seller's assists. You can get away with going above what list price is. So it's a very hard market, obviously, for the mortgage industry in general, because mortgage industry, typically most lenders, they make all of their money on refi. They do a ton of refis. That's really hard to do. I mean, it's impossible to do basically in a market where interest rates are increasing, right? The refi needs to be, like Logan said, an absolute must, right? There's some reason that you absolutely must, you need to pull cash out, whatever, to refi. And so we switched over to a purchase market. But the problem with the purchase market is obviously that there's a ton of competition.
Yeah. I mean, you can have 100 borrowers at a time that you have pre-qualified and pre-approved, but you're getting 1, maybe 2 a month just because of the lack of inventory. And then the competitive side of it then too, they can be the most aggressive buyers in the market. And I have some that are super aggressive and some that, are lackadaisy. And I tell them about themselves, because this is my job, and my job is to get them into a home. And, you sending me a property every other week and not going to see many properties and not putting in many offers, you're not going to get into a home. Right. It's a numbers game. It really is. And you need to see as many doors as you can that check your boxes, and then be as aggressive as possible on the ones that you do really like.
Yeah. And then you also hear horror stories of like the people that are first time home buyers or whatever, and they go out and see a property and they have a great opportunity to purchase it. It checks all of their boxes, but then they don't do it because they feel like it's so early in the journey and they haven't gone to see other homes. And then guess what happened? They kick themselves for not doing it.
Yep.
So
yeah, I've had that many times, and I've also sold the first home that we've seen to many buyers as well. Now, thankfully, we saw multiple, but it was still the first home that they saw, and they were like, "Wow, this is amazing." And then we saw a couple, and they're like, "Yeah, we're definitely making a move on that one."
Yeah. So, obviously in this kind of marketscape, you need to, you're going to need to be patient as a borrower or as a buyer. You're just going to have to be patient. You're going to have to trust the process. And like Logan said, you have to go out and you're going to have to see a ton of properties probably. And the more doors, the better, which isn't necessarily a bad thing, because then at the end of the day, you know what you like and what you don't like. Right.
Yep. I actually just had this conversation with a client over this past week, and said to them, they apologized. They felt like as though they were wasting my time. It's like, no, I enjoy what I do, and this is a part of my job. My biggest thing is I need to know how we can course correct appropriately. If you are telling me you want to be in this location and you want to have this type of heating and cooling, it needs to have central air, and it needs to check certain boxes for you, then we're only going to go see houses that are like that. There's no sense in going to see something that you can automatically disqualify right away. And then second to that, on the flip side of that, when we do see a house that checks all your boxes and you guys like, it's okay to pass on that, but tell me why. And it's okay to just have that gut feeling of like, I just don't think that this is the right home for me. That's fine. But if there's a reason, I need to know that reason so that way I can course correct and do my job to the best of my ability.
Absolutely. Well, you got to be honest with yourself at the end of the day as a borrower or as a buyer, and basically say, hey, like, The only real time you're wasting your own time as a borrower and the agent's time is when you are going to see a property that you absolutely know that you're not going to buy, right?
Yep.
So like Logan said, it's really important to have your criteria up out front as to what it is you were looking for, and say, okay, this is the guidelines of where we need to be or want to be.
Yep.
And making sure that the properties you're going to see fit within those guidelines, right? And then the other side of that is the numbers, right? That's another part of the guidelines of what the criteria you're looking for. If the house matches all your expectations, but the payment is $1,000 a month more than what you can afford or would want to do, is that worth to go see? Probably not.
Definitely
right?
not. Yep. And that's why, I always have those conversations with whatever lender I'm working with. More oftentimes than not, it's going to be Josh. The second I get a house from a buyer and they're like, hey, let's go check this out. No problem at all. Let me get some numbers on it. After we get the numbers, we'll talk through it. If it's kind of on that borderline of like, I don't know if it's going to, like, it's a little expensive for me, but you guys love the home, it checks all your boxes, well, it's probably worth going to check out. But if it's completely out of the realm of affordability, there's no sense in us going to waste both of our times,
100%. That's why it's important to have all your ducks in a row and make sure you know what you're pre-approved for, and know what the numbers look like on that pre-approval, as far as, and then also don't just expect that the numbers are going to be same for the house on Main Street as they are on Locust Street, because taxes are different, HOA is different.
Yep.
Do you need flood insurance? There's all sorts of factors that go into what your monthly and what your total out of pocket looks like. So
Exactly.
make sure you get pricing on that property every single time.
Correct.
Not just, hey, I'm pre-approved for $250 and this is what my monthly looks like and this is
Yep.
what my down. That's just a random scenario, right?
Yep.
So you need to make sure, because it can differ a lot.
Yeah. So, crystal ball time. When's the market going to change?
When
I don't foresee it changing for at least 12 to 18 months.
No, I don't either. My number one question is, what does Fed do? Because basically Fed operates on data points of statistics of what they look at, and there's laggards in them. They're looking at old data. They're not looking at real in-depth data as far as consumers go. They're looking at stuff that has a lag in the statistical data, right?
Mm-hmm.
And so they're not going to start lowering interest rates until they see inflation come down. The only reason they're raising interest rates is because they're trying to stop the economy. They're trying to slow down the economy to bring inflation down. They will not reverse that until they are happy. And so even if they're doing that, and they're not seeing the reduction in the high cost of goods, because there's a ladder in there.
Yep.
It takes time to do that. And so it's a very fine point, because if you slow it down too much, this is when you cause a recession. Right.
We're in a full-blown recession already.
Well, and that's the thing, is that are we or aren't we? Are we propped up by artificial data, basically?
Yep.
Or is the Fed doing its job? So, and that's yet to be seen, and you probably aren't going to see that for a little bit of time. So I think a lot of what happens in the marketplace is going to be determined on what the Fed actually does, because if they blow up the economy and we are in a full-blown recession, then that's going to change inventory a lot, because it's going to change interest rates. Interest rates will go back down to 3%, maybe even lower to 3%.
I don't think we'll ever see that again.
Well, it will if a recession happens, because they're going to have to. Because the only way to get out of a recession, it's like a teeter-tot, right? You're going back on the
seesaw.
You're either high inflation, and so you have to raise interest rates to bring it down. If you do it too much and you don't level out, you create a recession. And now you have to bring interest rates as low as they possibly can, so that you speed up the economy again and people start borrowing again.
Yeah.
And so that is going to be determined on what happens, right? If we go into a recession, the interest rates will absolutely come down to a very, very low, probably even pre-COVID low, because they're going to want to try and get out of it. And it will probably last 10 years, quite honestly. And it's going to go back to pre-COVID as far as like interest rates are low, people are borrowing money like crazy, right? And there'll be more inventory because now people will say, well, I still have all this equity because prices haven't come down yet on real estate.
Prices will jump again.
And
prices will continue to skyrocket.
Well, and it'll be a lot easier to borrow money. And so now people can afford more. And so the market will speed up. There will be more inventory and more transactions happening.
Yeah. Yeah. And I agree with most of what you said, especially in major metro areas, you know, but as far as like us here in Lancaster County, right? Like I believe that the country is in a recession right now. We are not in a recession here locally.
Yeah.
We have a very strong market, which is why we lack inventory and why house prices are still going for obscene numbers. I mean, I just looked at one that was listed at 420 and it sold for 480, you know,
Right.
and it was a 420 house. Like it's not worth 480,
Yeah.
you know. Like,
Well, and that's why I want to preference that by in no means am I saying that's what's going to happen.
no, I know.
Like,
Yeah,
you know
yeah.
what I'm saying,
I say crystal ball.
what does the Fed do? It is,
Yeah.
it's determined on that. It's really gonna be determined on that.
Yeah.
And that's what's gonna make up. Yeah.
I'm thinking at least 12 to 18 months in our local market until we see some pickup in inventory. And I think part of that is going to be based around the election as well.
Well,
I think that's always a crazy time for market, and I think that because of what we dealt with, regardless of what side of the fence you're on, I think because of what we dealt with for the last 4 years, I think pretty much everybody's going Republican.
well, it's interesting because what happens in an election is everybody gets scared before the election.
Yep.
Because they don't know what's gonna happen.
The uncertainty, yeah.
There's a lot less transactions that happen just globally as far as like the stock market.
Yep,
Like,
everything.
everybody just hoards.
They don't know what, yeah, they're like, what's going to happen? Yeah.
Every hold their breath. And then when somebody gets elected, it determines kind of what happens next.
Exactly. Where do I put my money?
Trump got elected and the stock market went crazy, right?
Yeah.
Through the roof,
Yep.
right? And so Biden got elected, and again, I'm not political, but Biden got elected, and everybody hoarded their guns because they were afraid that they were going to lose
Yep.
their right to bear arms, right? And so
Correct.
it's funny the landscape of what happens in an election as far as like people's psychology,
Yep.
which makes up the entire marketplace, right? Is
Human psychology.
Yeah, absolutely. At the end of the day, that's all it's about, which is, again, all the economy is based on.
Yep.
It's faith, right? It's a faith-based currency. And if you don't have faith in the currency, then the dollar means less.
Correct.
And so inflation happens, right? When you believe in your government and you think that times are going to be great, interest rates come down because it's free-flowing money and everybody is, you know, A-okay, everybody's happy. And so everybody's transacting. Everybody's not afraid to give away money
Yep.
because they know it's coming back, right?
So one more question for you before we wrap this up.
Yeah.
Is it still time to buy real estate investment?
100%. It's always time to buy.
It always is time to buy real
There's
estate
never,
investment.
there's never a time that you could ask me, hey, should I buy real estate now? Then I'm going to tell you no.
Yes. You
Your
always buy
parameters-
real estate.
Your parameters might change. They will change. Your parameters will change. What do you buy? You know, right?
You always buy for cash flow though.
Well,
Never equity.
if you're talking investment, 100%.
Well, that's what I mean.
But real estate's more than just an investment too. You know, you can buy it for your personal use, or you could buy it for, you know, I don't know. There's multiple different.
The question was real estate investments.
Okay.
Real estate investments you can always buy.
Don't ever buy for long-term equity. Don't ever.
Yeah.
Don't ever count on it. You don't want it, because what happens is 2008 all over again, right? You don't want to do that, because if you're upside down or you're even at 1, right, on your DSCR, meaning you're covering all of your monthlies and your liabilities with your mortgage payment and everything, you're upside down. If you are not making at least 25% more on that property than what you're bringing in a month, or what your expenses are a month, then you're upside down on the property.
Yep.
Point blank.
Always buy real estate for cash flow.
People got into this crazy trouble where they're like, all right, you know what? Well, the rent's $1,000, my mortgage is $1,000. Hey, the tenant's paying down my equity, right? I may not be cash flowing, but at least the tenant's paying down my equity. And so my equity will go through the roof in 5, 10, 15, 20 years, and I can sell and cash out. That's a great philosophy until the market tanks and now your mortgage is $2,000 a month.
Only because they were they were assuming arms,
Yeah,
That's
that's the market is crazy arm.
get it on a fixed rate mortgage,
100%.
cash flow, call it a day.
Well, and then what happens then too when you're getting your monthly tenant payment of $1,000, you're paying your mortgage, but then something breaks,
Then you got to come out of pocket, yeah.
or the tenant moves out and leaves the place a mess.
Yep,
Now you're upside down even more.
correct.
You need to be cash flow positive from day one, and you need to be putting away at least 10% of that towards future failures, because they are coming. I promise you.
Yeah. Yep.
So yeah, great question. Great video. Thanks. If you got value out of today's video, please subscribe and like, and leave a comment down below on what you want us to focus on, so we can make videos on it, and appreciate you guys being here.
Thanks, guys.